Hello, welcome to another trade recap. So this trade was taken on Tuesday, May 19th. So let's just get on to the charts. So the higher time frame bias was that I wanted the market to tap into this bullish weekly gap at that time. Now you can see it is mitigated, but at that time it had not mitigated this gap. It had not tapped into it. So this was my bias coming into that day. Now going on to 4-hour, we can clearly see that we have been rejecting these bearish gaps and going down towards our draw, which was this gap, and it tapped into it. And I will show you how I caught a trade toward this gap, and it was such a beautiful and a textbook short. Going into the 15-minute, let's have a better look on the structure of the market. Now clearly we had draws on liquidity to the upside, but I knew the main draw on liquidity on that day was this weekly unmitigated gap that I have marked right here. I showed you on the weekly time frame as well. So this was the main draw on liquidity. I was only going to take a short. I was not willing to take any longs this day. Now this is the true day opening, and this was the 9:30 open. Now look what we did before the 9:30 open. We accumulated, and then we had some 15-minute gaps above. This gap was unmitigated, and this gap was also unmitigated. Now, my main idea was that the market would take out these highs and tap into this unmitigated and then give move towards the downside, but it went into a more premium one, which I was not expecting, but this was A+2. This didn't invalidate my short-term bias towards this drawn liquidity to the downside. Now, as market opens, it takes out all of the liquidity on top of these wicks, taps into this gap and also this gap. Whereas on just 500, if I could show you, market never even takes out this liquidity. It neither takes out this liquidity, never taps into this 15-minute, and not even come close to this one. So there was a bearish SMT. This was my first trigger that the market has shown manipulation. It has taken out the liquidity. It has tapped into these premium 15-minute bearish gaps. Now we are ready to displace towards the downside. Now I just needed confirmation. Now going down into the lower time frames, after the market taps into this 15-minute, it here inverses this 1-minute gap, and this is where I enter. Now you would be like, why would you just enter off this inversion? Because my drawn liquidity was so clear, and if the market was to take out my stop loss, I was okay with it. And that means that the market wants to go up and take out these London highs and Asia highs, and that was not my drawn liquidity, and I was okay with taking that loss. But since I was so confident in my DOL, this was a discretion that I took this 1-minute inversion. I could have taken this change in state of delivery, which would have been a more confident way of taking this trade, but as I told you, this was a discretionary trade. I was highly confident in my drawn liquidity. The market had to go down there. This was the move of the day that I had to catch, and this is what I was prepared for. So this was for me the A++ setup. I took this trade, it went down a bit, and it tapped into this 5-minute gap, unmitigated gap that it had created. It showed some reaction, but as I told you, this would not send the market higher because the DOL was down there. So this 5 minutes sent it up and into this bearish 1 minute, and then it sent it straight down towards my drawn liquidity, and I got a beautiful 1:2.7 trade, and it made me around $195 by risking only $75. So it was such a beautiful and a textbook trade. Now I can show you the proof for it. This is the trade that I caught on my Funding Pips account. So yeah, that's it. This is a highly technical trade. This is not a psychological or an over trade or a revenge trade. I patiently waited for this and it delivered. So that's it. Stay tuned for more recaps.